Good morning, traders. It is Wednesday, August 17th. We're about 10 minutes into trading, doing something a little bit different today. Want to try and capture some of the early price action. I'm going to be speaking about trading gaps down. So that's the theme for today. I'm going to try and have educational content in addition to the pick of the day. So we're going to go back and take a look at the daily chart on my last picks, which came out about a week ago. And AMD was a stock that I liked. And it was right in here when the video came out. It's been a dud. It really has not followed the market higher. So a little bit disappointing. Not the follow through that I'd wanted to see, especially on a decent market rally. The other pick was XOM. That was a bearish pick. It has not done much either. So it has not been able to rally with the market. I still believe that the energy sector is going to be fairly soft. The caveat, though, to XOM was it had to be below the 100-day moving average, which it has not been. The S&P 500 also needed to be below the 100-day moving average. It has not been. So we'll put that SMA up and you can see, no, there's no reason to take a short position in this market. But when the video came out, we had lighter volume rally on the S&P 500. I felt that going into my time off that the market had a chance to have a decent pullback. So I wanted to arm you with a bearish pick just in case that was happening, and a bullish pick. So AMD did not perform as I had hoped. A couple of other stocks that I'd highlighted recently, though, Amazon, WWE, those participated very nicely. So let's take a look at the market. What the heck is the market doing? Today, we've got the market down about 30 S&P 500 points. And I'm hearing a little bit of clamor about, oh my gosh, what's happening? Why is the market down? Why is this happening? Is there some news? What should I be aware of? Folks, the S&P 500 has rallied 500 points in a month. July 14th, today's the 17th. That is 1 month. That is a 500-point rally. Why is the market down? You could scour headlines. Oh my gosh, there's news, from Singapore or Australia. It doesn't matter. I urge everyone, please, I'm not going to be highly regarded by CNBC and the other media outlets for saying this. Ignore that news. These guys try and explain every wiggle and jiggle. That's their business. They want you to feel as though you can't trade without having their news on. And they will explain away every wiggle and jiggle, even though that's not why the market is down. I'm going to show you why the market is down. It's profit taking. The 2% interest rate hikes that we've seen so far since May have not even filtered through the economy. We just had a 0.75% increase just a couple of weeks ago. That hasn't hit the market. It's not going to hit the market for, excuse me, it won't hit the economy for a couple of months. And so right now we're still getting good economic releases. So everybody's pretty bullish. They're kind of looking around going, huh, that wasn't so bad. So let's start buying some stocks in here. And oh, inflation seems to be abating a little bit, but everyone feels that it's going to be persistent. Yeah, the reason it's come in is because we're seeing some drop in energy prices. Oil production is on the rise. So, yes, we're getting some temporary relief, but food prices are still very high. So, here's how we trade gaps down. They need to be taken into context. What is the market doing? What has it been doing in the last few weeks? So when you see long green candles, and this is where we're going to get into the education part. So when you see long green candles like this, what does that mean? It means that the market opens on its low, closes on its high, opens near its low, closes near its high, opens near its low, closes near its high. So what does that mean as far as trading gaps down? Well, when you have a strong trend like this, Gap downs are going to present a buying opportunity. You have to wait for signs of support. When you have them, you want to be ready to buy. So we're going to take a look at some of those signs. Context, context, context. So Pete told me that every time the market is in an uptrend, I need to buy gaps down. Typically, yes. Today's a little bit different. And gap down buyers gap down, rally, 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 gap down, rally, 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 gap down, rally, rally, rally. These buyers in here have been very successful buying gaps down. They're going to try and do the same thing today, but things have changed. Well, what's changed? Well, first of all, we have the FOMC minutes today, which aren't going to really mean much because that news is already out. We've had a ton of Fed speak. So everybody knows that the Fed is still on their tightening path, and there's no reason for them to get off of it because the economic numbers have been excellent. This is going to be a splash of cold water. Nobody likes to be reminded that the Fed is still going to be tightening. So there's some nervous jitters ahead of the FOMC minutes. This is the last that we'll really hear from the Fed. It's the last look that we'll have until their September 21st meeting, which at that time they plan on raising another 50 basis points. So this will be kind of the last look at where they stand, but nothing new. Nervous jitters, some profit taking. So let's take a look at the 5-minute chart because that is the clue. Look, we got up to the 200-day moving average. We were trading yesterday, and I'd mentioned to members in the chat room, everything looked great. We're using 10P. Going to use it this morning. Look, this is exactly the formation that I warned everybody about. I said in my pre-open market comments, which you can read on my Twitter feed, you can actually go to my homepage and take a look at the chat room from the prior day. All of our trades are posted, all the comments are posted, so please use that resource. You'll see every trade we did. It's pretty incredible the amount of money that we've been making. So as I mentioned in this morning's comments, said we are going to see some dip buyers come in early and they're going to try and fill this gap. If we fill less than half of this gap, and let me get that SMA off of there, clear things up. If we fill in less than half of this gap, it's still going to keep us below this support level, now resistance, and it's going to show that there's not that much buying conviction. So these early buyers are going to get flushed out. Well, they tried to stack a couple of candles here, and you can see how this candle finished on its low. That is a bearish sign. So I think there's going to be a decent shorting opportunity this morning. You can see we're below the prior day's low. Here's what I'll be looking for. I'll be looking for mixed candles with lots of overlap. Overlap, 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 overlap. That is a sign of a weak trend. Yesterday, we had a gap down. Okay, here's what happened yesterday. So when we get these gap downs, I don't need to be the first one to buy this because we know that the markets run hard and that these early anxious buyers are probably going to get flushed out. In fact, we saw that the previous day. And here you've got this nice run up. Now, this was actually pretty substantial, but this long bar came instantly. So you're still watching, 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 zoom. Well, you probably missed this move. Then we get a bearish hammer and we get a bearish 10P cross, and we know that we want to wait patiently for that support to form. So we do nothing here. The second mouse gets the cheese. Guess what happens to the first one? It has its head caught in the mousetrap. So we want to be patient. We want to wait. All of a sudden, now we start retracing this long green candle. Not good. We give up half of it very easily. So this is nothing but fluff. Nothing but fluff. All these dip buyers super anxious to get in. Bye, 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 bye. Uh-oh. Uh-oh. Sell them, sell them, sell them. Get me out. Oh my gosh, this thing's going down. So they get flushed out. You do not need to trade the first half hour. You don't need to trade the first 45 minutes most days. Be patient. Wait for that 10P cycle to run. Aha. Now we have a bullish 1OP cross. Downward sloping trend line, have support, tails under body, tails under body, tails under body. The support level is checked a second time. Higher low, double bottom, bullish cross, 1OP, long green candle closing on its high. Hello. Yeah, that's where we want to get in. Now we start getting mixed overlapping candles. Okay, bearish 1OP cross, take some profits. There's your sell-off right here, 1OP, bullish cross. Okay, downward sloping trend line, get long here, reload. Yesterday, very similar pattern. 1OP spiking, bearish cross. Mixed overlapping candles, no good. There's nothing going. They can't even fill that gap and keep it in there. Smack a smack a, smack a smack a, smack a smack a, tails above body. There's selling pressure. So what happened here? Buy, 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 buy. These are all dip buyers in here going, hey, I'm taught that if I buy on the low of the day, that I can keep a tight stop. And I'll have my stop just below the low of the day. So they are getting confident in here because support is forming. Bearish 1OP cross, long red candle. Oof! Where did that come from? That's all of these buyers here getting stopped out. Is this red candle going to continue? We don't know. We got to wait and see. Is it a head fake? We won't know for a few candles. If it's a head fake, you're going to see an immediate bounce. Ooh, okay. Hey, this is a really nice candle here. Took out half of that long red candle instantly. And we have a bullish 1OP cross. And we have a downward sloping trend line that's being violated on the outside. And we have a longer term market trend that we can get behind. Yes, this is where patient buyers will come in. And now we start to take off, take out the high of the day. Beautiful entry point. So now what happens yesterday? Well, we get this really nice run up, start giving back some profits. No real big reason to have to take profits in here, but you got a bearish 1OP cross right in here. Okay, yes, this would be a sign. Let's get out. Let's go to the sidelines. Let's see what this bearish cycle brings. If it's wham, 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 sell off, we're going to be pretty happy that we're sidelined. Just wait, see what it does. Okay, you get a couple of red candles in here, nothing too dramatic. Now we get a bullish 1OP cross right in here, downward sloping trend line. We have this nice price action with stacked green candles. That tells us that there's some decent buying pressure, and we've seen that for the last month. So we should see, after really strong price action like that, we should see a bearish flag formation. There's your 1OP cross, downward sloping trend line. Aha, here we go. March, 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 March. Getting our bearish 1OP cross right up here, couple tails above body. Here's something super important to know. These weren't just bearish hammers at the high of the day. There's something more to these bearish candles. What was it? That's what it was right there. The 200-day moving average on a daily basis. After a 500-point S&P rally, do you think there might be some profit taking at a major resistance level like that? Uh-huh. Well, 1OP was telling us, get the heck out of the way up here. Now we stand back and we watch. Is there going to be heavy selling pressure? Is this going to be a massive smackdown? Or are we just going to drift off of it and maybe make a couple more attempts at it? Those price movements are going to give us all the information that we need. If we see stacked red candles, then we know that we are going to get some heavy selling pressure like this and probably some follow through. And that's what's happening today. That was your signal. So if we had just a wimpy little retracement, mixed green, mixed red, overlapping candles, small pullback, that's a sign that buyers are still there. They're not deterred by that 200-day moving average. This is a smackdown. Yes, we did bounce, and you have a longer term market uptrend. So, in the initial phases of a reversal or a potential reversal, trend reversal, you're going to still have a very sticky bid. There's still going to be some people coming in to buy. So, that's what happened yesterday. And this was a really nice drop. Very late in the day, we had a very nice bullish 10p cross. So these are the types of things that you need to be watching, and you need to put the current gap down for the market into context. And right now, I'm getting ready. Look at this. This is 10p getting ready to cross. This is an indicator that took me 10 years to develop. You will not find it anywhere else. Works great for stocks. Works great for the S&P 500, particularly on a 5-minute basis. You see these overlapping candles? You see that bearish hammer right there? I think I'm going to short some futures in here. And I am getting ready because this is a very wimpy little bounce. I don't have to do it yet. So I know everybody's always asking me, oh, could you please do some trades? Could you please do some trades? I'm gonna put a trade on, but by the time this video concludes, I may still be in the position. But this high right here should hold. So I'm just waiting to see what happens in here. But I've already got the signs that I need. You can see these are tiny little bodied candles, and then we get this one, and oh, already we're starting to see a little bit of selling pressure. We get these candles right in here, this long green candle. Hey, if we stacked another long green candle, we closed on the high, maybe had a doji, the next candle, and then another long green candle, we're through the halfway point of this gap. I'm changing my mind. So we didn't get that. We got exactly the formation that I outlined in my pre-open market comments, which was, traders, I think we're going to get a nice shorting opportunity. So I'm going to try and get some futures off here. And I'm short one contract, and I hope that screen, okay, so we're all good here. So I'm only short one futures contract. Maybe I'll short another one. And I'm going to wait for confirmation now that this high is still in. I've got this bearish 10p cross pending, so I'm a little bit early on it. We'll see what happens in here. In any event, when you start looking at gaps down, it's important to know where you are in the longer term context of things. So if I see that we are in a longer term market downtrend, we have a very light volume rally in here, which you can see the volume was low, 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 low. This is just a bounce, and now we're compressing, and we can't get any further, and we still have that longer term downtrend intact, and now we have a gap down. Okay, well, this is different. This is much different because we have this little bounce, and we've got some room, lots of room in here for the market to fall. And now, in this instance, I'm certain of it, you would see consecutive long red candles closing on their low, stacked, maybe 4 or 5 or 6 of them even in a row. That tells you that you're going to have a bearish trend day. And when you close on the low like that, you take out horizontal support like that, you take out this upward sloping trend line in here, you know that you have a bearish flag formation and that you're likely to see follow through. So we come down here. We have a market decline, and I remember these 2 days right in here very, very well because we had a round of news that came out here, and you saw gap down, rally up, gap down, rally up. That was a sign that the market was ready to start moving higher because you had bad news and the market was able to shoulder the news. It gapped down and it rallied up off of that support level right in here. So it was able to shoulder that news and we got a higher low double bottom. Also on a daily basis, bullish 10p cross. Here you can see 10p on a daily chart is starting to crest. right in here and it's rolling over. This indicator is early, so we have to wait for confirmation, technical confirmation. We still don't have it. We still have an upward sloping trend line that is intact, so I'm not overly concerned with this market decline yet, but we want to watch these levels very carefully. Major support probably comes in around the 417.50 level. That was horizontal resistance, now support. You can see that gap right there. So 417.50 is an important level. I'm going to be watching that level because I'm anxious to sell some out of the money bullish put spreads. So over the course of the next few days, I'm going to be waiting and watching for the market to come in, and then I'm going to be evaluating stocks to see which ones did not retrace, which ones have held strong. And right now, my futures are down. I'm down about $400 on it. I'm not sweating this at all. We're starting to get into this high right here. So what I would like to see, I don't mind it poking. I don't want to see 1, 2, 3 candles up into the middle of this gap down. That would be a bit concerning to me, but I know I've got this working in my favor. I know that I've still got some overlapping candles in here. I know that buyers are going to be fairly aggressive. Buying dips has worked. So once they load up, they are vulnerable because one long red bar will shake them out, and then I could see the follow through that I'm looking for. And we're going to get that cross right in here. See that? Another tail above body. That is a sign of resistance. So if I were trading a gap down, I've already given you some different scenarios, and I probably have about 25 different scenarios on trading gaps. So this is not an easy topic for me to talk about, but I plan on outlining a variety of scenarios just like I am this morning. And in this particular scenario, you have to keep these things in mind. Number one, market is still in a longer term uptrend. That's beautiful. Normally we want to be buying these dips, but we've seen the first signs of selling here on a major resistance level. So that's what's different. Yes, buying gaps down for sure has worked all throughout. It's worked here, here, here. It's been working. Okay, the market has that strong trend. But now that we're finally seeing that resistance level here at the 200-day moving average, you're still going to have these guys in here thinking, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. Keep doing it until the market proves you wrong. Well, now we've got signs of that selling pressure, and that is why I'm a little bit bearish this morning. I feel that these guys are going to get shaken out, just like these buyers right in here. Buy, 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 and then, ugh, ouch. Well, you're just a little bit early. I mean, this is a good entry point, but you got shaken out, and that's why we had that long red candle and that snapback right here. So in here, these guys that got shaken out on their stop orders are bummed out right here because they're like, oh, I knew this was going to be a good entry point. So then they start to get back in, and then you get that relief rally. Here we go. I'm ready to, I will short another futures contract in here because I see what I need to see, and those are long tails, and that tells me that there's some resistance forming. Now, I'd mentioned that we have the FOMC minutes coming out later today. It's not going to be a huge event because we already have that news, but if the market has no direction, we could just flop around and stay inside of this range until those minutes are released. So let's see what happens in here. I am looking to add. Where would I look to add? Well, I can do this. I could take this and could connect these tails right here. Got a small upward sloping trend line, but I'm really just looking for follow through in here. And I'm looking for just a nice little red bar in here that tells me that yes, now sellers are seeing that there is pressure here. We're not going to be able to get into that gap. And that was proof and that was proof. So I want to see continued proof. I have to be a little bit more careful shorting right now because I'm trading against a longer term market trend. So I'm going to hold off for just a little bit, but if we can take out this low right here, yeah, I'm going to be adding another contract. So let's add that. All right, so now we've got another horizontal support level. That would be the low from this candle. Why is that significant? Well, it's not hugely significant, but you can see how they tried to sell it off and buyers came in, buy, they closed it on the high. So anybody that was buying in this level, once we breach that, I'm pretty confident that they are out of the way. And you start getting a couple of red candles in here, and you can start getting some momentum. And there's our bearish 1OP cross. So let's see what happens. In the meantime, I'm going to be keeping the S&P 500 up. I'm going to keep it up in the background, and you'll be able to see the price action, and I'll let you know when I'm shorting. But I've got the signs that I need. Am I looking for a big market decline? Probably not, because the market trend has been so strong, because we have the FOMC minutes coming out later today, because there hasn't been any huge news that would spark big selling. Retail sales came in better than expected today. So there's nothing outside of the market being overextended on the upside that's going to create a lot of selling pressure. The other thing that will create selling pressure is these guys in here who are buying this dip because it's worked. When they get flushed out, we're going to see a couple of long red bars, and I will probably be taking gains on that move. And here we go. So I'm going to short another futures contract, and I'm making money on my other futures contract. So life is good here. And so now I'm short a couple of contracts. And there's my alert that the S&P has breached below a technical support level. So now that I've got my short on, let's do some analysis and let's take a look. Okay, there's the other support level that was breached. A couple of things. Always put alerts. My God, there's so many good stock trades out there. You don't need to sit and park butt on a stock symbol. Set alerts when they go through a key price point. Then you're interested because you're through that key price point, but you can keep looking for new candidates. Pull this back just a little bit so we can keep an eye on the S&P. I always have a chart of the S&P 500 running in the background. Always, 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 always. And so should you, especially with this 1OP indicator. This is how we time our entry and exit for day trading. Yesterday, okay, we come in here, we're patient, 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 patient. We start getting this bullish cross in here. Now we're watching. Okay, red candle. Now we know it's a head fake through that halfway point. This is where you start buying stocks with relative strength. On the way down in here, you're able to use searches like relative strength 30, market down, 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 show me stocks that are up, up, up. Because once I get that market support in here, those are the stocks that are going to fly higher. Home Depot, OSTK, W, Amazon. I mean, these are some of the names that we were trading yesterday, and we were all over them. So we get this 1OP cresting in here. We start getting some mixed candles in here. This is where you would want to take profits on your stock. We don't know if this is going to manifest into this at this juncture. Take a breather, take some gains, relax, see what this bearish cycle brings. It brought nothing. Good. I expected it to bring nothing. That tells me that this bullish cross is probably going to be a good one because we are still near the high of the day. Nothing organized like this. No heavy selling. Still near the high of the day. Okay, we weathered that storm. This is going to be a good bullish cross. So compression, compression, compression. All right, here we go. Time to reload our bullish stocks. Get ready for another run higher. bearish cross right here and the 200-day moving average. That is where you want to be taking profits on your stocks. These cycles on S&P 500 using OneOp are critically important. They will help you time your entry and your exit. And I hear all the time, oh, I keep leaving money on the table. How do I know what the best exit point is? I just don't know. How do I know when to enter? These are the cycles that you need to use for your entry and exit. They work beautifully, just like what I outlined this morning. Folks, here's what I'm looking for. I'm looking for mixed overlapping candles. I'm looking for a market that can't get into the middle of this gap. Why? Because I saw that reaction to the 200-day moving average yesterday. And because I know the dip buyers are going to be very excited in here. WAPA. That's okay. Still like it. WAPA. Okay. These guys are going to get flushed out in here. We're going to take out that low of the day. Got our bearish cross happening very early. Got some consecutive red candles. Now, these guys, they're worried. When they get flushed out, you see a long red candle. Maybe I take profits. Maybe I set some targets. We'll see. I don't know. Maybe this gets it to be something a bit more organized. So let's talk a little bit about that because I've already talked about it. Okay, here's what happens when you trigger sell stops. You get a solo like that, an immediate retracement. That is a head fake. That is how you know that this move is just a fake to trigger sell stops. If this had a doji, red candle, red candle. Now we're getting follow through. Now we know that this was just not a solo to shake out sell to trigger sell stops. This was something much more legitimate, and sellers are not letting the market come up for air. That would mean that yes, now we're going to continue lower. So that's what I'll be watching for here. If I just get a solo long red candle and we retrace all of it, I'm going to take my gains. On the other hand, if we break through this red candle, red candle, red candle, I'm going to be pretty confident that yes, we're going to see some additional profit taking this morning. So let's go in. Let's see if we can find some stocks. I'll look for a bullish stock. I'll look for a bearish stock. Let's do some analysis. Let's see what our searches are showing us. Let's go into Pop Bull. So we got market down, 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 gap down on its low of the day. Wouldn't you like to find a stock that's bucking the trend? Well, let's look no further than green royal flush. This stock is bullish, has buy signals across the board. Ooh, plus it had earnings before the open today. That's beautiful. Market down, down, down. LOW continuing to grind higher on heavy volume. Well, heavy volume because of earnings. Yes, if the market finds support here, which stock do you think is going to be most likely to go up? One that's already going up would be my guess. That's the beauty of relative strength. That's how it works. Why in the heck is this stock going up when the market is going down? We know 75% of all stocks follow the market. Why is this stock going up? Because institutions don't care about this little market dip. They don't care at all about it. They are undeterred. It's keeping a small lid on the stock. LOW wants to go higher. You can see that it's broken through horizontal resistance. Nice, strong upward trend. Let's zoom out. Above the 100-day a long time ago. 200-day today. Beautiful. Downward sloping trend line comes in right about like that. Just visually comes in probably around that 200-day moving average. That's been breached. Easily could be my pick of the day. Royal flush green. All right, let's take a look at another one. Let's go into the non-zoomed version. This just gorgeous stuff. Look at Walmart is in this gap right here. Held the 200-day earnings before the open, gaps up. Walmart looks beautiful. VERU. Through horizontal resistance, stacking long green candles. I like it. I mean, stock is up, up, up through the prior day's high when the market is down. BTU, that's nice. Take a look at that daily chart. Yeah, okay, it's getting through this downward sloping trend line through the 100-day moving average. BTU looks good. I could pick any one of these. Apple, look at Apple. We talk about wanting to sell out of the money bullish put spreads. On a market drop, I was really hoping that Apple would come down to this price point right here. That's why I set a GTC alert. Because if it comes down to this level, I'm going to sell a bullish put spread at that 200-day moving average. And at this price, I'll be close enough to it to where I'll be able to get a decent credit for it. So that's what I'm going to be watching for. Apple today is telling me it's strong. Market down, Apple up, me likey. This is what we do. If you come in and look at the chat room on my homepage, you'll be able to see the prior day's activity. This is not just me making trades. This is not just the featured traders making trades. We have dozens and dozens of traders who have learned the system, who are absolutely crushing it. I love it. I mean, that's what motivates me to keep doing these videos and to keep trying to help you. These are all great stocks. One search. I could trade any of these on a market bounce and do well with them. Papo, we'll take a look at that. SAVA. Ooh, wow. Haha, that's a nice one. Downward sloping trend line, breach to the upside, blows through that 100-day moving average. Oh, yeah, look at that. Stacked green candles consecutively. All right, so I'm going to go into my chat room because I'm just going to post the symbol and let my members know that I've got something that they need to be aware of, and they probably are already on it. I could almost bet you that somebody is on this, but I don't have time to check that, so there. Sava easily could be the pick of the day. The only issue with Sava is we've seen a lot of short squeezes recently. This could be a short squeeze. So you get a big single candle like that. You have to know what the news is. Make sure that there is news, that it's not just a BBBY short squeeze, and that the stock could be volatile if that's the case. But if there's some material news, this thing could keep right on going. Let's keep taking a look at some of the day trading searches and see what else we've got popping. Lily, choppy, nothing much there. Boy, I love that LOW. Love that Walmart price action too. Really good stuff. And I am looking to sell out of the money bullish put spreads. So I really like the fact that retail sales came out strong this morning. Just taking another little look. Home Depot we were on yesterday right out of the gate. Right in here. Broke through this horizontal resistance, major horizontal resistance. I pointed this out about 10 minutes after the open. I didn't point out 50 stocks. I only posted Home Depot and maybe one or two others. Once I saw those two candles right in there and the stock holding all of its gains with the market doing what? With the market pulling back. The stock preserved its gains. Institutions are in there buying it. See you later. Made a killing on that yesterday in the chat room. That's how we do it. That's what we're looking for. So if I have to give you a pick, yeah, LOW could work very, very nicely. And let me take a look at where we might sell an out of the money bullish put spread. I like selling it below this 200-day moving average. So I would be looking to sell maybe the 215 strike. You can see how it is at 215.96. You can go short term on this as well. I believe that this stock is going to be able to preserve the opening price today, given the price action that we've seen so far. What's the market telling us? What do I want to see as somebody who right now is bearish and who has a short futures position on. Bearish 1OP cycle, I would like to see red candle, red candle. I got to see a red candle in here pretty soon, or this is going to tell me we're going nowhere fast, just chopping around. During a bearish 1OP cycle, fairly early in that cycle, I want to see whap, whap, whap. Not really getting that right now. I'll give it maybe another bar or two, and then I'm going to exit. What I do not want to see is I don't really want to get above the open from this candle. I really don't want to get above this price level right in here. I'd like to see that long red candle. And right now it's telling me the bid is still pretty persistent. I'm not seeing that heavy selling pressure like that. So buyers are still fairly engaged. And I believe that if we do see a long red candle in here, it could be a solo. So just because of what I'm seeing in here, if we had more progressive selling, that would tell me that they can attack that low of the day, they can flush out those sellers, and then they're going to look to continue to sell and take profits. What this is telling me right now is that no, we still have some support here, tails under body. These are just buyers lining up at the low of the day, and that long candle's probably not going to gain any traction. So those are my thoughts right now. Never bad to take profits. Let's see what happens. I'm not going to hang out on this trade for more than 10 or 15 minutes because it's the open and I don't know what is going to happen. I got in. My expectations were those red candles. I'm not getting it. So every minute that I wait in a short futures position, I get closer and closer to 50-50 probability. I'm not in this game for a 50-50 probability. I'd rather go to Vegas, drink some cocktails, and play that game. I want a 75% win rate or better. And if I do have some losers in there, it's okay. I want to keep them relatively small. Time is another way of stopping out your trades. So in this particular gap down, I want to see that follow through and I want to see it pretty soon. So let's talk about your bullish pick of the day. I'm looking to sell out of the money bullish put spreads. I like selling an out of the money bullish put spread, keying on LOW, and I'm not really sure where these options are priced right now, so let's take a look and see if we can pull up some option prices. I'd like to stay within 3 weeks or so, so let's take a look at the September 9th options. Let's see how far out of the money we can go on these. Stock is currently at 220. I'd like to get down to this 215, 210 price point, and so we've got 1, 2, 3 weeks out. 215, 210. I could do that for a $1 credit. I could do that for probably a $1.20 credit. 83-cent bid offered at 184. What can I get if I go lower than that? Well, let's try and go to all the strikes and see what all the price points might be. If I can do a 210, 205, that might actually work out a little bit better for me. And we'll click that, we'll click that. Now we'll see it's 49 cents bid offered at 126. I like to get a dollar for these spreads. And where does the 210 strike price put me? The 210 strike price actually puts me way down into the middle of this candle. I feel that opening price today will hold. I feel the middle of this long green candle will hold. I feel the 200-day moving average will hold. I feel that the upward sloping trend line will hold. So I'm going to be looking at that 210, 205 bullish put spread for a $1 credit. I need this little breakdown and I need a little reprieve in the stock price this morning to get that done. That's your trade of the day. Pete, can I go in and day trade lows today? You betcha. Just wait for those dips, wait for it to come in, wait for that support. We want to see the high of the day hold, and we want to make sure that this bearish cycle has run its course. I'm going to take a look at Sava. See, I can't do Sava because who knows what that stock could be. I love this price action for day trading right now. Man, is that a nice one. I know this stock is going to continue to go higher, just based on what I see right now. Heavy volume, stack candles during a down market. Okay, so I guess, and I don't know the news on it, I guess I'm just going to stick with LOW. So let's take a look. We've got the market down. Let's see if we can find something that is bearish. Here we have resistance. Here we've got the 200-day moving average being tested, TXN. I'm just going into heavy selling search, and we would expect to see there's an upward sloping trend line right there on SE. Bearish reaction to earnings yesterday below the 100-day moving average, follow through this morning. Yep, that could work. Still looking. Ooh, there's a upward sloping trend line breach to the downside. SPLK, that could work nicely. Earnings on 8/24. So next week would prefer to have something that's already posted earnings. ZIM. This is nice. Before the open, breakdown through horizontal support and this upward sloping trend line below the major moving averages. Take a look at the price action here. It's making a new low of the day. Market is not making a new low of the day. Sure, that one could work. And go back into the daily chart. Sorry, this has turned into a long video, but I think there's a lot of good content in here, and you're seeing how I would actually go through and conduct my morning analysis if I'm looking for a short. Just clicking and looking right now. Let's take a look at that 5-minute chart. SE is weak. You can see during the market rally yesterday, the stock continued to sell off. That's not a bad one. W, you can see all the gains yesterday are being given back. Earnings here before the open, rejection on that 100-day moving average, but upward sloping trend line, so not of great interest to me. Just taking a look, see what's on our Royal Flush Bear, TWLO, APP. That is a weak little stock. Upward sloping trend line, breach to the downside. Yep, I like that one. Through horizontal support, look at that consistency. Love that. When you see a stock that's down, up, down, up, down, up, that's not what you want. You can't predict where that thing is going. This, you can predict where it's going. Might it have a little bounce? Sure. And then another leg lower? Yep, you got that D1 chart in your favor. Horizontal support breached. Can't get through that 100-day moving average. Rejected on that earnings before the open. Yeah, APP. That is your bearish pick of the day. I like LOW. This is the process that you have to go through. Trading gaps down, it's all about context. It's all about knowing where your support and resistance levels are, what type of trend you have, and then watching the early 5-minute bars. And in this case, I think I'm going to be exiting my trade. I've got a profit in it right now, and I'm not getting the price action that I want. So I'm going to take a $200 profit on 2 contracts. It's a short position. If we start cracking down below this support here, then I can always get back in. But right now, very, very choppy. We may not go anywhere today. So that's your video for today. I hope this helps you trade gaps down. In the description area of this video, I'm going to have my website listed. Please come in. Scroll down to the middle of the homepage. No registration required. Take a look at what we traded in the chat room yesterday. You'll see every single trade. It's logged along with timestamps so you know exactly when we got in and out of the position. Good luck with your trading. I'll try and do more videos. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.